9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open up markets in Greater China. Our top stories today, investors giving a tepid response to Nvidia's sales forecast, signaling persistent concerns about an overheated AI sector.
Asian stocks, meanwhile, jumping following a bullish session on Wall Street, while currencies hit a 16-month high, supported by a weaker dollar and a rising yuan.
Also ahead, German Chancellor Friedrich Merz wraps up his China visit today after meeting President Xi Jinping, voicing optimism their countries can manage differences.
And the chief of Lotte Group's drug-making unit tells us exclusively about the opportunities they're seeing from a shift in production away from China. It's another day, and then I think it's another kind of tale of two AI sort of stories that you're seeing between the U.S. and Asia, right? You know, we saw what we saw with the Nvidia after hours, seesawing a bit despite some pretty blowout numbers.
Yeah.
But Asia still kind of riding this pretty strongly, especially what you're seeing with Korea. We're at records here when it comes to Asian stocks here as well.
Yeah, what's interesting to your point is the tail also within Asia, where you have the Korean names to your point, where it's still rallying hard, but the Japanese supply chain part of Nvidia, not exactly mirroring what you're seeing in Korea, not exactly mirroring what the projections coming out of Nvidia, which it was very difficult to actually find a soft spot when you look at the Nvidia earnings.
Yeah.
Apart from the fact that markets are not impressed, I guess, is the perhaps more material soft spot there. But yeah, and you know, that goes into the risk rally that we're seeing across the Asia Pacific today, thanks to what's happening in Korea. Not to also mention we have rate decisions coming through. The Bank of Korea just coming out, of course, unchanged there. And, you know, so I'll put the Korea story and the Hong Kong story together, where you had the BOK and the Hong Kong government yesterday both raising their respective growth targets for the year. So it's going to be interesting to see what the market reaction is going to be day 2 on Hang Seng.
Yeah.
And on what's going to be happening in Korea once they flesh out the rationale behind why they kept rates unchanged.
It's interesting, the Hong Kong budget, that all of a sudden we're back to a surplus right now after what has been several years of a budget shortfall. So, you know, thanks to, of course, what we've been seeing, right? Capital gains. You talk about this equity market that's really helped in terms of them getting taxes and the like. So I think in some ways the equity market and what we're seeing with Hong Kong itself is certainly seeing a bit of a link here these days as well.
It's really a flashback from, if you think about it, 15 years ago, when the leading names in Hong Kong are the likes of the property names like Sun Hung Kai. HSBC is doing very, very well in this market, right? It's almost Chinese tech platforms in the market. That version of the Hang Seng is actually showing out. So we'll get into all of these things in a moment, but certainly when you look at the earnings story, Baidu is going to come out today. Speaking of the Nvidia effects, as we can see there on your screens, it's showing up in Korea. Taiwan is coming online, and let's see how TSMC is trading in the opening minutes. SK Hynix, that should also be doing quite well. The second name coming up on your screens shortly will be Nvidia's biggest supplier in Japan. So there we go. Certainly far from impressed. PLS is that's down to the lithium story, and this whole cohort of lithium and battery-related stocks will be very much in focus today. On the separate but equally material story on Zimbabwe suspending exports of lithium, so we'll watch what the implication is going to be when things opening up here in Greater China. The dollar is slightly stronger, which means we're slightly weaker on the Japanese side of things. We're at 156 still on dollar yen. Brent and gold fairly behaved. A50 futures coming up on your screens, and dollar China 685, 686 already there as far as the exchange rate is concerned. Very, very strong session yesterday on the Chinese currency. Yeah,
35-month highs here right now, and not much pushback from the PBOC in terms of that fix. So we'll see what we see here today later on. More on, of course, Nvidia's results now. Let's bring in our Asia tech correspondent, Annabelle Jewelers. She joins us now. So, I mean, great earnings, but not great enough for the street, still seems.
Yeah, I mean, this is sort of, I feel like, a very recurrent narrative now, that you go into these earnings and it's always that, Nvidia is going to beat beat the consensus on Wall Street. It's not going to top the loftiest of projections, and then investors are going to be disappointed, and that's exactly what we're seeing this time around. But just in terms of the numbers, so they're saying that the fiscal first quarter sales are going to be about $78 billion. That was ahead of, as I said, analyst projections. The average was for 72.8, so quite a big gap there. But the loftiest was around $80 billion, so you're just shy of that. In terms of what we saw in the fourth quarter, again, the numbers were strong here. You can see there, well, that's the first quarter forecast, but also in the fourth quarter as well, revenue climbing 73%, coming in just over $68 billion. Profit, $1.62 a share. Again, that's better than what analysts had been projecting. In terms of where this money is coming from, of course, it's really that data center unit. It continues to be the major driver. Actually, we saw a little bit of weakness in the gaming division, which is interesting because revenue or sales there fell a little bit short of projections, which probably would have been a big deal a few years ago. But you're talking about, $4 billion of revenue versus $60 billion plus for the data unit side. So it just very much pales in comparison, of course.
Yeah, the law of big numbers. And, the relationship of the markets and the stock has certainly changed over the last 4 quarters. Talk to us about China and what their assumptions remain, or have they changed their assumptions in the China business?
Not really too much, essentially. I think it's still really just that big unknown for the business. Because AMD in their latest results, for instance, you actually saw them getting a little bit of revenue from China, but that was because they were selling much older technology. They haven't actually sold any newer chips as well, AMD, but Nvidia is still making no assumptions around China data center revenue in their first quarter sales outlook. They actually had a separate filing to the exchange where they did say that they've essentially been greenlit from the Washington side to start some small-scale sales of H200 chips to China. But I think the big caveat here is exactly still around how Beijing responds and will they allow companies to make these purchases. So, yeah, as Nvidia said in their earnings to date, they haven't generated any revenue under the H200 licensing program, and they don't know yet whether any imports will be allowed into the country as well.
Belle, thank you so much. Annabelle Jewelers there laying out the Nvidia results for us. Also some context and the guidance they're coming through out of the company. Joining us now to talk us through the earnings and what this means for the stock and for the company. And we've been struggling to find any soft spots here. Maybe Beth Kindig can help us out. She's joining us out of Colorado today, lead tech analyst at IO. Beth, as always, a pleasure, and thank you for carving out part of your time to speak with us. Just your take, initial take on these numbers.
Yes, similar to your correspondent, the market is growing numb to the beats and raises that Nvidia keeps putting up. The fundamentals are as strong as ever from this evening. In fact, the data center growth, data center revenue hit a record on quarter-over-quarter revenue. And then if you also look at the fact that the CFO backed that up by saying there would continue to be quarter-over-quarter growth throughout calendar year 2026 and visibility into 2027, plus that $6 billion beat on the data center. David, I don't think we could have gotten a stronger report tonight, yet, as you can see, the price action is quite muted.
Why do you think that is? Is it just expectations? Is there anything in the near-term horizon that you think that could continue to weigh on this stock?
There could just be some fatigue over the AI economy and the many question marks around the circular investments. What I foresee happening is that analysts will very likely have to go revise estimates upward after the report we just got. $6 billion beat, and then, of course, saying quarter-over-quarter growth expected the rest of the year. That is implying, and they also point blank said, we are going to exceed the $500 billion that we had guided between Blackwell and Rubin. Just all across the board, analyst estimates are probably too low. They will have to go revise them, and the stock price will catch up intra-quarter.
And I guess in totality, Beth, you put this report together with the last, let's call it 4 quarters. What does the trajectory look like to you as far as the company's concerned longer term? And I still remember our conversation some quarters back. Is it still a 10 trillion market cap company? Is that still the underlying longer term North Star here?
Yes. So as the market plays tug of war over is the AI economy booming, or are there concerns around the AI economy? And Nvidia continues to beat regardless of what this debate is concluding. The stock just keeps getting cheaper and cheaper to the point where it's becoming an obvious buy, in my opinion. We're at April lows on valuation, sales ratio, and earnings ratio. Yeah. Back to your point, David, about this 10 trillion. Yeah, it's very possible, because if you do the math of where this revenue is headed, along with typical valuation for Nvidia, they are well on their way after this evening.
Okay, I think the sentiment, as you say, has been quite fragile given this whole scare trade. Whether we're seeing in software and other sort of industries now, and people are really questioning how to look at AI. Is it really a friend? Is it really a foe? How should I be looking at this whole scare trade now? Has it been overdone? Is it actually opening up a lot of opportunities for you, Beth?
I love buying AI stocks lower, especially if they're suppliers. However, when I look at the scare trade and you look at some of these notes that have come out around, spiraling unemployment, somewhat dystopian around an economic collapse, those kinds of things, these notes are not reflecting a balanced view to where, what is the positive that AI is bringing? We're not hearing that piece, which is that by lowering costs, there could be a wave of entrepreneurship. By lowering costs, exponentially, margins are going to expand and there could be cost savings. So I think a more balanced approach to where these margins are expanding, which is great, profits are increasing, which is great, needs to be reflected as well.
Right. Beth, that probably applies to most of the AI scare trade list. What about specifically software? How do I look specifically at that pain point?
Software is very interesting because I had put out a note in December of 2022 that there was an alarming amount of deceleration in revenue from that category, that sector, because there was such a massive pull forward from COVID. What I was seeing is quarter over quarter and year over year deceleration. So basically, software has flatlined for 3 years with or without AI competing. And now AI is moving in on its territory, and AI is getting blamed for what is actually very typical disruption around tech. For example, mobile had 2 to 3 million apps at one point. Now we use 20 apps. That's another example of the consolidation we've seen in tech, which is also happening to cloud software.
And for those thinking, what's the most durable sort of play for AI right now? Most of us in Asia have talked to analysts that say, look, it's going to be the Koreas, right? That's why I'm seeing the cost view that's still up some 40% this year alone. Do I still focus on the picks and shovels of the whole AI supply chain, or how are you looking at it now?
Yes, when I'm asked if AI is in a bubble, I point to the fact that bubbles typically show signs of oversupply. Therefore, by concentrating where supply is constrained, there's defensibility to a portfolio. To your point, memory from the Koreas, excellent spot. Of course, we have Micron in the United States. If you go and look at those numbers, they are showing extreme levels of supply constraints to where you might even say the word crisis, especially as more HBM memory is needed with each generation of GPU. So overall, I really like to stay where the supply is constrained because that's the opposite of what defines a bubble.
Yeah, absolutely. Beth, can I also just get your take, just to circle back on Nvidia, but also bring in AMD, if you could, and this pitch that it's AMD to catch up to Nvidia, and I wonder whether that there is a threat to Nvidia's moat. Is there room for two horses here? Do you think AMD can be successful in that endeavor?
I do think AMD will be successful in taking some market share from Nvidia. Nvidia represents pretty much the whole pie, at least in the GPU market. What that means is the pie will continue to grow, although Nvidia will not have such a dominant market share. What we saw from Meta with the 6 gigawatt deal on top of OpenAI's 6 gigawatt deal for 12 gigawatts, that's actually very, very massive. Microsoft puts out about 2 gigawatts a year right now, and the United States had a Stargate deal worth 10 gigawatts. So right now, those two deals are exceeding Stargate. That's a massive vote of confidence from some pretty big players. I just want to emphasize that 12 gigawatt total, pretty big.
Beth? Great to have you, Beth Kindig there, lead tech analyst at IO Fund. In terms of what to watch, of course, it is going to be the chip space very closely here in the Greater China area. A-share rally certainly has been one to watch. We're near those 10-year highs when you look at the Shanghai Composite. So 41.65 according to my eyes. That's the level to watch. Renminbi strength, as we talk about, 35-month highs. And certainly we saw a pretty big intraday moves yesterday to the upside for the renminbi. So we'll see what the fix brings in a few seconds. Trip.com, there was some information on this probe and really the latest in terms of that investigation. So certainly that's one to watch in terms of the stock itself. Earnings also came out when it comes to the fourth quarter, which did beat estimates. And we also, of course, have the German chancellor in China, and we are still waiting for some FDI data.
Yeah, in terms of sectors to watch, there's an overlay from this, of course, into where specific groups we're tracking today. We talked about lithium and the ban coming out of Africa, Zimbabwe specifically, so that goes into lithium, that goes also into battery, which also might go into car makers as another pinch on the margins there if those upstream prices do go up. Property, we'll talk more about this in a moment. Copper still up on my screens right now as far as the Shanghai copper contract is concerned, and we haven't even gotten to the earnings story here.
Yeah, so companies to watch, right? Baidu certainly has been one. Analysts have been quite pessimistic in some ways about really the AI sort of applications and whether they can deliver as well. Sun Hung Kai actually is the opposite story. In fact, as Dave mentioned, it's one of the best performing stocks that we've seen on the Hang Seng of late. So those earnings are set to be pretty rosy here, and really many on the sell side are saying and are calling for a recovery there on the back, of course, of that Hong Kong budget. And what we've been seeing when it comes to luxury taxes, we'll see how that impacts, of course, the real estate sector too.
Right. Just ahead here, see the German chancellor is in town last day. That visit, of course, to China, seeking better ties with Beijing amid these lingering worries over global trade and supplies of key materials. Oh, look at how that theme looped back in. We'll get the latest on the German leader's visit coming up next, counting down to the open of trade. Shanghai, Shenzhen, and here in Hong Kong, we're about 13 minutes away. A gloomy day, a weak fix, a weaker currency. Futures are pointing to the upside, though. This is the China Show. All right, the future is looking bright. On markets, equally. There we go, on your screens. We're poised to open higher today. A weak fix, though, coming through out of the PBOC.
Yeah, maybe finally getting a little bit more pushback from the PBOC on the strength that we've seen in the currency. We didn't get that much sort of intervention yesterday, so today maybe could be at least slowing down the rally that we see in the currency. So we're 685.43, but as we mentioned, it's the highest level we've seen in about 35 months. So certainly that is a source of, I guess, brightness, as Dave has mentioned there. Let's talk a little bit more about geopolitics, because we have Germany and China expressing optimism that they can overcome their differences on trade and geopolitics to forge stronger ties. The Chancellor Friedrich Merz wraps up his two-day visit today with a trip to the AI hub of Hangzhou.
Both the Chinese and the Germans are aware that our economic exchange contributes significantly to the prosperity of both countries. The fact that two of the world's three largest economies are engaged in trade with each other generates great momentum, both for us and beyond. The potential that still exists here is also evident from this trip.
Let's bring in our chief North Asia correspondent, Stephen Ingles. Seems like both sides sound pretty rosy. What did we achieve in this trip?
Well, they're saying the right things right now, because I'll take you back in history, as I always do, to give context. Because Friedrich Merz, when he was campaigning to be chancellor, and he became chancellor in May, he was fairly hawkish on China. Maybe that's dating back to his experience at BlackRock, as well as at prominent law firms. But again, he cautioned German industries to maybe pull back or not invest as much in the Chinese economy, because there's lots of issues with the overcapacity that the Chinese industrials are sending to Europe, whether it's EVs and batteries and other things, that threatens the likes of BMW and Mercedes on their home turf, but also at home as well, where Mercedes is in the good fight against the onslaught of a price war by Chinese EVs and the like. I'm getting into the weeds here a little bit, but again, he has a lot of trade and commercial issues with China leading up to this trip, as well as geopolitical. Keep in mind, Germany is one of the biggest outspoken voices, if you will, against Russia's war in Ukraine, and the de facto tangent connection that Beijing has by supporting Moscow, that is a contentious issue for Friedrich Merz. So all that aside, they're saying the right things. He's taking a bit of more of a pragmatic approach. He wants to see how Germany can work. They're a big industrial power, a big exporter, just like China is. How can they work with China going forward, given the new world order, as Mark Carney, in his trip to Beijing, really sort of dramatically stated? He's less drama, very pragmatic in his speech. We just heard him. But again, there is this new dynamic with the trade war that Donald Trump launched. And perhaps the United States is not as a reliable partner as Friedrich Merz, who's been a longtime advocate of the United States, once presumed.
He's wrapping up his trip, as we were pointing out, in Tech Hub, Hangzhou.
Yep.
He's probably not going to be there for Westlake or Hairy Crabs.
No, he's going to go.
Might be part of it.
He's going to see the humanoid robots.
Okay, yeah. So
yeah. Unitree is one of the biggest
there we go.
humanoid robotic companies that do all the backflips and the kung fu and all that. So he's going there, as well as a Siemens factory, as well as a Mercedes factory in Beijing today, before going to Hangzhou. But the crown jewel, perhaps, of this state visit and also business delegation trip to China. It's only 2 days. They're packing in a lot. But Merz is saying that Xi Jinping has alluded to the fact that there could be 120 plane order from Airbus imminently. We don't know which models of the Airbus, but we do know that they do final assembly of the A320s and A321s in Tianjin. There could be an order, he says, for about 120 aircraft. And that dovetails nicely with Donald Trump's trip coming up at the end of March, where David Perdue, the U.S. ambassador to China, told me at a conference, the Goldman conference, just last month or earlier this month, can't remember. He said, last month. He essentially said, yes, the Boeing aircraft order, possibly from China, is going to be high up on the agenda. China hasn't bought Boeings in a long time, many, many years. So again, that fight is ongoing.
Steve, thank you so much. Stephen Engel, there, our Chief North Asia correspondent. The renminbi fix of the day was set at the weakest relative to estimates on record, 610 basis points. Interesting that we are getting, the opposite reaction. We are seeing substantial strength coming through. I promise you we'll get you more context on this massive move that we're seeing currently in the Chinese currency to the upside. And you know what? As I speak, we are getting closer and closer, yes, to 685 on the exchange rate. Hang Seng Tech, Hang Seng China doing well. So we are poised to gap modestly higher at the open today.
Yep, so it looks like we are seeing a bit of recovery here. Of course, we talk about Baidu, we talk about Sun Hung Kai. Those are going to be the earnings that are going to be leading the charge here today. In terms of stocks to watch, it is going to be the tech space, and then there's going to be this lithium story. There you go. On the back of the Zimbabwe ban on exports of lithium, you're already seeing some of these stocks across the region surging on that news. Gamma Lithium up close to 5.5%. You're watching the China show. The open is next.
Welcome back. You're watching the China show. So a couple of things on deck today. Earnings. So you have some big names coming through in the tech and real estate space. Just to name a few, this Hong Kong rally that's taking place in the form of a Hang Seng Index that is of a 2000s version of it showed up, right? So when you look at HSBC and Sun Hung Kai leading the rally here today. Very, very OG Hang Seng version.
I have to say, my mother's been asking, how long should I stay on my HSBC shares? You know, the retail investors are asking where further
record highs
when it comes in. Earnings certainly help that as well. Interesting too, with the likes of UBS saying, there is a bit more, maybe 20% upside when it comes to MSCI China here. They're saying there could be some potential for a reflation this year in China. So, James Wang and his team saying valuation re-rating, stronger earnings growth could be underway.
Didn't you see that last year?
Yeah, we've got to get him back on the show, right? So that's what their bottom-up survey suggest here for 2026 here, and they're focusing mostly on, how they're able to raise prices, these companies, due to sales pressure. Earnings expectations would be lowered as well, given the input costs. But then again, we'll see the downside risks for their MSCI China, if that's the case. All right, let's take a look when it comes to the open here right now. Onshore markets are still doing quite well. We wanted to note when it comes to the Shanghai Composite, right? We are actually near decade highs for that benchmark. So certainly that's one thing to watch. 4150 is sort of where we stand right now. We'll watch very closely what happens when it comes to, of course, the tech space, given the fact that Nvidia earnings, they impressed, but then not enough, right? And so the after hours trade was a bit seesaw here, and we ended up actually climbing down and really reversing some of the initial gains initially. That's actually helped in some parts of Korea, in parts of Taiwan. The picks and shovels and chip stocks. We had Beth Kindig from IO Fund just came on and said, look, if you have any concerns about AI bubble, just look at these tech constraints or supply constraints that we're seeing in memory, and that just goes to show, and that dispels all the concerns about when it comes to being in a bubble. So yes, that's why you're still seeing that dispersion, and quite a heavy one, across some of these Asia sort of names. Capricorn Tech is not doing a whole lot here today. We're watching CATL, though, just given the impact on the Zimbabwe ban on lithium that is impacting parts of that supply chain. So CATL A shares are down more than 2% right now. Take a look at how Hong Kong is faring here today. So it looks like, that budget was actually quite positive, right?
Yeah.
We're surprised to the upside when it comes to, we have a budget surplus, the first time in a few years. And so, a lot of it has to do with some of, the taxes have been gotten, profit taxes and the like, and really the capital gains that we've been seeing in this equity market. And they're really redeploying that back into AI. So certainly there is some more, upside maybe, or maybe a potential for growth to actually be higher here. So of course we did see the growth prospects, the outlook from Paul Chen yesterday was quite favorable. HS Tech, we're flat here right now, but look at the property sector. Continues to outperform today. We have Sun Hung Kai earnings coming through later on. They are one of the ones that's been leading this recovery among the developers here today. And there you go. We're seeing another 2% upside for the stock. CK Hutch also up some 2%. There was that talk about the luxury tax, right, on property.
Yeah, the stamp duty.
So we have JL coming on later on saying that, it might have an impact. Maybe initially, but then they still expect to see some bit of a recovery to continue here when it comes to stamp duties as well. Let's look at the local sort of chip making sort of sector here. The SMICs, the Hua Hongs, continues to do quite well. Decently higher here today. Here, HS Tech catching a slight bid right now. You're watching BOK lines. Dave.
Yeah, details from the statement out. So they've kept the interest rate unchanged at 2.5%. It was a unanimous decision, and the median projection shows that is where the cash rate is expected to be in 6 months' time. So prolonged hold there coming out of the BOK. This time, the next hour, we'll be pouring over the press briefing, of course, which is scheduled, of course, to begin in about 45 minutes. From now. But there we go. BOK rate decision coming through, by the way, on the back of the Thai rate decision, which came out yesterday, just to sort of close the loop on monetary policy.
Yep. All right. Well, we're still focusing on some of these AI names here, particularly when it comes to China. So Baidu is the next one to post fourth quarter earnings today, under pressure, though, to prove that its AI investments are on track to paying off. Just look at the stock, right? The past month or so, it's down nearly 20% in Hong Kong as investors seek tangible results. For more, let's bring in our China correspondent, Min Lo, on really the growth issues that this company still is dealing with.
Yeah, I think it's an industry-wide issue, right? You look at the tepid market results, market reaction to Nvidia, and you can tell that the expectations are just sky high for these AI names. And Baidu is such a well-established name. It's one of the very first to roll out a ChatGPT-like service in China. But then after that, there had been so many other names that came up with their own models, from the big names like Tencent, Alibaba. The Q1 model is very popular. ByteDance has its own model as well. And then you have the new upstarts like DeepSeek. You have the likes of Zhipu, Minimax that just debuted, very strong debuts in Hong Kong that really drew a lot of cash away from the big names. The big three giants like Tencent, Alibaba, Baidu all see their stock prices all down over the past month. But Baidu is the worst of the three. And so we are looking at revenue and profit this time expected to decline. Revenue and profit expected to decline on year. Primarily, it's because of the advertising business, the core business that is, of course, very tied to the broader economy. But also, there's just not enough evidence that its AI spending is actually bearing fruit.
Separately, we're also looking at shares of Xiaomi today. really on the back of, well, this was an incident, of course, which took place many months back, but what do we know about the latest development there and what the stock is perhaps doing?
Yeah, so this is, according to what Caixin has reported, they got hold of the judicial report, the forensic report as well, of what happened. This relates to that accident back in October of last year, a fatal accident that killed 3 people. So the local police suspected that the driver was drunk and it was traveling at a speed of over 160 kilometers per hour, and it collided with a vehicle in front of it, and that impact caused a short circuit of the battery, which controlled the electrical door releases. Now, the problem is the car didn't have an external mechanical release, so even the bystanders who saw the accident couldn't help to open the door, and when they smashed the windows to try to open it from the inside, they found that the door was still jammed. So the car, after colliding with the vehicle, it hit the curb and it exploded 3 times in 5 minutes. And the report from the liability report now puts the full responsibility on the driver, but the family is contesting it, saying that because the death was caused by the fire rather than the collision, they're saying that this is partly due to the failure, the lack of safety mechanisms in the car.
Okay. Min, thank you so much. Min Lotte with the latest on both those stories. Certainly the development as it pertains to the car door, of course. A few weeks back, China came out and said, no more of that specific design to the door of the car. We're just to circle back to markets right now. And by the way, on the Baidu story, we'll be joined tomorrow by Alicia Yap, coming to out of Citigroup, of course, to help us unpack that. And also just to understand, well, for one, they have a buy rating on their stock, but also just to understand why the substantial underperformance we're seeing across the Chinese platform names, and is there a catalyst that actually puts that trend to an end? S&P futures on your screens. We're still tracking, of course, the developments as it pertains to the Nvidia story, and it's interesting given the backdrop of the AI scare trade that's been dominant across these markets. Joining us here on set to talk us through all these things is Marcella Chow, global market strategist at JPMorgan Asset Management, here with us on set. Very nice to see you.
Same here. Happy Chinese New Year.
Happy Chinese New Year to you too. How are you looking at this AI scare trade?
Right now, yes, ongoing AI disruption concerns have actually triggered this notable shift because we see a new page of AI story or leaders have actually emerged. It's not defined no longer by just the mega cap or the ones investing into AI, but those that may actually be reshaped or other sectors that are reshaped by AI. So we see actually broadening out that we have always been talking about that's happening actually beyond and within USAI and across to not just enablers, not just the innovators, but into enablers in, for example, industrials, utilities, materials sector, and also the adopters in financials and healthcare. So it's broadening it out beyond just the tech sector. And this AI is no longer just a tech narrative. It's a cross-sector, cross-asset market story now. And indeed, overnight we saw the earnings. It was better than expected, and but then the AI anxieties continue to actually penalize the ones with CapEx surprises over the ones with good revenue surprises. But one key thing that Yvonne highlighted is that we see that the computing demand remains quite strong. And that's actually a good thing for Asia, especially Asia AI and the hard tech, because we see that computing demand remains strong. And so the infrastructure build out, which actually needs a lot of, as long as data center remains to be built and constructed, semiconductors, power, energy, networking, they will still be in huge demand. And so that will benefit Korea and Taiwan, those hardware and hard tech providers that have actually been outperforming the US.
What about when it comes to China AI?
China AI is another good story as well, that we remain constructive on China because of AI adoption, and also it's across different sectors, not just agentic AI, but into physical AI as well, robotics, and then also semiconductors as well. And we recently saw innovation like fintech and also into biotech. So those will also benefit within China, and especially with the self-sufficiency that suggests that, and also policy support definitely. So that will suggest we'll need to continue to see the policy support from the MPC, whether they will be leaning towards rebalancing, and whether they'll be prompting for like higher quality growth and a focus on tech.
We probably need to define more slightly what we mean by Chinese AI, right? Because Chinese AI 6 months ago, those were the Baidus of the world.
The tech giants.
The tech giants, they've underperformed.
Yeah.
So when we say we'd like Chinese AI, what is that? Can we be more specific on the group? Is it the hardware names or something else?
The startups, right? We've seen
like
policy support into focusing across the spectrum as well. Because software these days, there are questions about, is it too big? And then focusing instead of like the small startups that are focusing on developing the agents, etc. So going forward, I think both will benefit, and especially I guess the demand story will actually also benefit, because domestic demand, even though it's slowly recovering, we see that the demand sufficiency or demand internally should be able to suffice. And with this actually the financials as well, we've seen the software that have actually disrupt the whole financial ecosystem as well, with tech, especially innovation. So going forward across this sector, not just within US, within China as well, we see that that will benefit several sectors. And also we'll need to see right now, because with several startups that have actually disrupted the recent AI startup stories within China. We'll like to see whether this will sustain. But with the, for example, AI 6 tigers that we have seen in China, and but then right now we've seen the infrastructure build-out story that will continue to suggest computing demand. That suggests hardware will also be one key thing, and the software will need to see whether this is sustainable.
Understood. Okay.
Yeah, you mentioned MPC, and maybe any sort of tech focus is certainly one thing. What else could be a potential catalyst?
Market right now is focusing on the State Council government report and also the fiscal budget that will be delivered on day one, March 5th. And then afterwards, it will be delivered and also approved by the MPC. Yeah. And so there will be several numeric targets, whether the GDP targets, we're seeing around 4.5% to 5%. So suggesting a pragmatic shift to higher quality growth, focusing probably to like tech and also rebalancing. There might be an announcement on consumption ratio, because right now consumption ratio is currently around 39 to 40%. It's much lower than global standard, around 60 to 70%. So if they indeed suggest like a consumption ratio that they need to achieve by probably 2035, that suggests there will be a focus on boosting consumption, more structural reforms going forward. So this is another focus that market is looking at.
Can I just ask you, any thoughts on Hong Kong has really outperformed in terms of the market, like Hong Kong specific names? Do you have any thesis onto why that's happening and whether that continues, whether it's property or the banks here listed in the city?
Property, one thing, and probably retail, hopefully slowly recovering. That will also benefit. And overnight, we got the report for the budget. And that was well received by the market as well. And hopefully, but I guess we'll still see whether implementation will be key and whether that will deliver and actually continue to, because right now it's still, even within Hong Kong, demand is still being affected. So domestic demand is still a bit subdued. So going forward, and especially with the ongoing geopolitical tensions, that may affect also Hong Kong market that is more affected by the global sentiment.
Very, very open.
But then one thing is, other than the MPC, I think afterwards market will focus on the China earnings season. That will peak in the third week of March. And also the second thing is President Trump will be visiting China at the end of March. So hopefully that will suggest this first time in 9 years. So hopefully that will suggest improvement in the geopolitical tensions, and that will hopefully bring back a bit of risk on sentiment within Hong Kong and China.
Okay, March is not going to be a quiet one. Thank you for that reminder, Marcella Chow there, our global market strategist there at JPMorgan Asset Management. Just to end on that last theme that we just mentioned there, Hong Kong continues to outperform. Check that out. MSCI Hong Kong up 1.4%. The rest are slightly to the downside.
And coming up, the Pentagon reportedly takes steps towards putting Anthropic on a blacklist, usually reserved for companies from geopolitical rivals like China. Well, the details next. This is Bloomberg. All right, we got some reports from Axios here reporting that the Pentagon has asked 2 defense contractors about the reliance on Anthropic's AI model, Cloud. Now, it's seen as a first step towards potentially designating the U.S. company as a supply chain risk, something usually reserved for geopolitical rivals.
Yeah, strange one, this headline, if you're not aware of the background.
Yeah.
Bloomberg Politics editor Laura Davison is here with us to give us really the context and why this is happening at this point.
Yeah, so this is a fight that has been brewing between Anthropic and the Pentagon for several weeks now. Essentially, the Pentagon has a contract to use Anthropic's Claude model, which is one of the most advanced models in its various systems, but there's been disagreement about how much the Pentagon can do. Anthropic basically says there's certain things, such as designing weapons and infiltrating computer systems, that we don't know what our model can do. We don't want you to do that. And the Pentagon is saying, look, we want to have carte blanche to run this model how we see fit, complying with U.S. law. And this has really hit a fever pitch this week with Pete Hegseth, the defense secretary, saying, look, Anthropic, you need to give us the ability to use this model as we see fit by Friday, or else we will do one of 2 things. Either label it as a supply chain risk, which would essentially mean that all these other companies, Lockheed, Boeing, can't use it. This is essentially kind of blacklisting it from the defense industry. Or there's another option being considered, using the Defense Protection Authority. This is essentially a Korean War era authority that would allow the Pentagon to say, look, we need this for defense and we're going to take it over, use it how we want. So this is, kind of been a political fight. Anthropic is more on the left side. The CEO supported Kamala Harris during the 2024 election. This has kind of been both a political and policy fight for several weeks now.
Because other tech companies have actually adjusted in terms of how much the military can really get, or at least the limits, of course, of AI in warfare in some ways, right?
Yeah.
I mean, we've seen other companies have actually adjusted to what Hexa has wanted in some ways too, right?
Yes, it's a very nuanced conversation. Some of these other companies have sort of indicated that they're working with the Pentagon on this, whereas Anthropic has drawn a more of a sharp line and been very public, saying, no, we don't know what our model can do. We don't think it's safe if you try to do some of these things, because we just don't know what this will mean in terms of the safety of U.S. citizens as well as others.
And this is something that we've seen they use with Huawei as well. I mean, it's quite rare to have a U.S. tech company
fall under
targeted,
this framework.
right?
Yes, So we're leaving a supply chain. Yes, this is for a supply chain risk is something for Chinese-owned companies, or having an American-owned company, an American CEO based in the U.S., American homegrown. This would almost be unthinkable. And you have some outside observers saying that this would really be sort of an own goal, the U.S. shooting itself in the foot in the AI race if they're not allowing themselves to use this technology because it's some of the most advanced.
Interesting to say the least, really. That this is what's happening there. I'm sure lots of people outside the U.S. are watching this really with popcorn. Laura, thank you so much. Laura Davison there, of course, our Bloomberg Politics editor. Really, the important nuance in that story there. Our Bloomberg subscribers can read more about, in fact, that high stakes conflict between the company and the Defense Department. Today's Big Take and Big Take Go. That's also on Bloomberg.com. If you have an internet connection.
All right, another AI news this morning. Alibaba stepping up its push to AI-powered software coding by offering low-cost access to several of its top models. Users can access these products for just over $1 for the first month. Alibaba's cloud unit says it has begun selling tools built on the group's own open-source model, Qwen 3.5. It's also using platforms from startups including Zhipu, Moonshot AI, and Minimax. Reuters is reporting that DeepSeek's latest AI model was trained on Nvidia's Blackwell AI chip. Now, it quotes U.S. officials saying that DeepSeek removed technical indicators that might reveal its use of American AI chips. The Chinese embassy in Washington told Reuters that Beijing opposes drawing ideological lines, the expansive use of export controls, and politicizing economic trade and technological issues. Investment firm General Atlantic is reportedly selling a stake in China's ByteDance that values the parent company of TikTok at $550 billion. According to Reuters, the sale process was started in recent weeks with the aim of finalizing it next month. The reported deal highlights sustained investor interest in the company. This is Bloomberg. In some corporate news this morning, French utility Engie has agreed to buy the UK's largest power distribution network from Hong Kong billionaire Victor Li's CK Group. The $14.2 billion transaction is expected to close in mid-2026, making Britain Engie's second largest earnings contributor after France. The deal comes as the UK rushes to expand its grid to meet surging demand from renewables, EVs, and data centers. And we are looking at lithium stocks in China after Zimbabwe suspended the export of concentrates and raw materials effective immediately. It's part of a push for mining firms to set up local processing operations. The mining ministry says the ban will remain in effect until further notice. Zimbabwe has become a major global lithium supplier following billions of dollars in investments from Chinese companies.
All right, before we look at the equity market implication of this, I also want to point out you have the BOK decision, so that's one thing we're tracking. The Yuan, that's also going to be in focus over the next 60 minutes or so. EMFX, suffice to say, big inflows, by the way, into Taiwan, which is perhaps why we're seeing the underperformance there today. Overheated short-term RSI indicator on the Taiwan market, which perhaps underscores this very sharp dispersion we're seeing among really the same group of companies, right? We're looking at Taiwan, Nvidia-related companies too. Right, Chinese tech in focus too, coming up on your screens, the semis names here, and not really a lot to tell you about as far as that's concerned. On the currency front, so in the next hour, the Bank of Korea will be outlining, of course, their decision, and the briefing is starting, and the strength coming through very strong now on the Chinese currency.
Nvidia continues to surprise and delight the market. It was a solid set of earnings, and more importantly, they had a very confident outlook for how they were going to sell more AI chips and data center product going forward. And I think we're all looking forward to seeing, is that going to be a thing? Could it be any bigger than this? And they basically said yes.
Nvidia hit it out of the park yet again. We saw, phenomenal results. And I think what was particularly, maybe not surprising, but impressive was 75% growth year on year on the data center space. They're still investing, and these are going to, signal good times to come for Nvidia, in our opinion.
As the market plays tug of war over, is the AI economy booming, or are there concerns around the AI economy, and Nvidia continues to beat regardless of what, this debate is concluding, the stock just keeps getting cheaper and cheaper to the point where it's becoming an obvious buy. If you go and look at those numbers, they are showing extreme levels of supply constraints to where you might even say the word crisis, especially as more HBM memory is needed with each generation of GPU. So overall, I really like to stay where the supply is constrained, because that's the opposite of what defines a bubble.
Yeah, so our guest there from Bloomberg TV reacting to Nvidia's earnings and latest sales forecast and saying, look, maybe it's just fatigue out there, but these numbers were pretty solid when it comes to fundamentals. So that's certainly one thing to watch. But then again, you take a look at how markets are doing here on a pretty foggy, I guess the humidity is kind of high these days. It's feeling a bit wet.
Yeah.
It feels a bit wet, I guess, in the markets as well. We're just lower by about a fifth of 1% here today. 8 shares are seeing maybe more bigger moves there, down about 0.8%. But it was, after optimism around the budget and the like that we got yesterday here, which did send some positive vibes around the outlook around the economy and the like, and maybe this market as well, Dave.
Absolutely. In fact, there you go, right?
Yeah.
MSCI China is the only bright spot today across the greater Chinese markets, equity-wise.
MSCI Hong Kong, you mean?
Sorry, yes, MSCI Hong Kong. There we go. Outperforming. So there are two things that have emerged dominant recently, right? The Hong Kong play and also the non-tech play in China, which is Shanghai Comp. You have the banks there. In fact, Shanghai Comp itself is very near a 10-year high. That's coming on your screens very, very shortly, too. So Shanghai Comp, there we go. We're about, from the current level, I think we're about 0.7% from hitting a fresh 10-year high on the benchmark itself. We talked about MSCI Hong Kong has done well. In fact, on a longer-term basis, have a look at where we are there in the 10-year horizon. We're back to levels of 2021. We're still some distance, of course, from the back to the 2021 levels, of course, which underscored at that point, of course, a broader market rebound. Apart from that, back to the here and now. Nikkei, Topics, Kospi, when we will be getting the briefing at some point starting in the next few minutes out of the BOK, and Taiwan, which is flat right now, to underscore the everything but the market theme on Nvidia. Dollar China offshore, dollar Japan, and Korea, of course, where the median projection based on the statement suggests that the rate will be where it currently is at 2.5%. Over the next 6 months or so.
Yeah, so maybe some strength in the Korean won, but it is against a broad kind of weaker dollar story here. Yen, we'll talk about what Takeichi and some of those BOJ picks as well. Renminbi continues to be strong here, despite one of the widest dispersions in terms of the fix and estimates here today. Let's get more on the equity side of things and bring in Lanting too, our Asia Equities Managing Director. She joins us from Singapore. The Nvidia story is interesting, how it's kind of playing out across the Asia region. It seems like some of these Nvidia suppliers in Japan are in some ways underperforming, but Korea stands out and still riding this whole wave in some ways. What do you make of this whole Asia sort of tech dispersion that we're seeing now?
Yeah, I think choppiness is probably a good word to summarize all the reactions that we saw. Nvidia itself, of course, erased all the gains to have a loss by the end of the late trading session. And Asia suppliers largely has also erased the gains. The reason is, according to a lot of analysts, is that these suppliers have really rallied hard leading up to this report. And today, this very solid report has translated to a very big sell on the news or profit-taking event. And it also underscores the kind of jitterness investors have over the sustainability of the huge-scale AI data center build out. And as you mentioned, Korea indeed is an outperformer. And that really is another evidence to show that Korea's memory chip shortage or memory chip filled rally is really detached from this jitterness that we saw related to Nvidia earnings. And, that also means that there is a lot of momentum still behind the Korea rally after it surpassed a 6,000 milestone yesterday.
Lianting, well, when you look at the FX complex, because there's an equity market implication to this, the dollar is really gaining momentum to the downside as we speak, quite literally. And I wonder whether there's an overlay there in terms of a stronger Chinese currency and its relationship with the equity markets here.
Yeah, technically speaking, a stronger yuan would mean the yuan-denominated earnings for mainland companies would be translated to higher numbers in Hong Kong dollar and US dollar for those listed overseas. But if you look at HSCEI's moves today, it's actually on the downside. The reason mainly is that there's still a lot of worries about these big spending and price war among these big tech companies, Alibaba, Meituan, JD, Baidu, which reports earnings today, and Tencent. We've talked about how they've spent a lot of money luring end users to sign up for their AI apps. So this kind of price was really causing worries on their margins. But to counter that, UBS today did come out with a report saying that they expect a 20% upside for the MSCI China, expecting that inflation will turn positive, actually 2% this year.
If James Wang is listening, that's your invitation to please join the show. Lianting, thank you so much. Lianting to our Asia Equities Managing Editor there in Singapore. James Wang, of course, if you didn't get that reference, it's with UBS. That's a random name I'm just putting out there. The PBOC this time in the last hour, fixing, giving us a midpoint that it has had a record spread to estimates, and of course, the 24-hour background here is a really weak U.S. dollar going into today, and that's what we're getting still.
Yeah, another blow to the U.S. dollar in some ways, and that fix is a first here on a 6.92 handle since May of 2023. So that puts the currency now on course for its strongest close in almost 3 years, as, of course, this dollar continues to retreat. Let's bring in our Chief Asia FX and rate strategist, Stephen Chu. He's with us here right now. Despite that sort of fix, we're seeing continued gains in the currency.
I think the direction will be intact, but of course the pace will be moderated given the fixing. It's not a surprise at all. And the fixing implied that now they're very cautious with spot heading towards 6.8. So probably the first red line for now in the near term is 6.8. So there could be profit taking, the gains could slow. But beyond that, we know about it. Weaker dollar, really tailwinds in China, like all the equity, frenzy, and then structural tailwinds as well. we were one of the more positive analysts about the yuan since last year, but we do turn cautious from here because the gains, not just against the dollar, against the basket of currency, has been quite rapid since the second half of last year.
Yeah, I think 685, we were just talking during the break. That's usually what most analysts out there have said their year-end forecast, and we're only still in the end of February right now.
No, I mean, 2 more days, and it's leap year too at that. Talk to us, so you put out more research, in fact, just a few hours ago on the Chinese currency. So talk to us about valuation.
I mean, from a valuation perspective, well, there's different aspects. From a short-term perspective, it's actually quite fair because we look at rate differential. The US dollar is still running higher rates, so probably the yuan should weaken. But if we look at the longer-term structural tailwinds like the IMF, like the US Treasury, they argue about over 10% undervaluation. They look at current account, they look at trade surplus. So it depends on like what metric you're going to look at.
Let's talk about the yen, too, because it did move on the back of what we heard from the Prime Minister and her candidates to be the next few members of the BOJ. That does seem to be a bit more of a dovish tilt to who she's picked. What do you make of it?
Absolutely, it's more dovish. So it's very consistent to the Takeyachi trade. So markets now will still continue to bet for a slower pace of tightening and more fiscal stimulus, meaning that will be a weaker yen. However, we also remember that there's this warning from the U.S. Treasury, warning from the Bank of Japan, or like Ministry of Finance. So there's like intervention risk. There's a Takeyachi trade pulling dollar yen. So it's going nowhere. 155 still.
Just a quick note on the Korean won before we get the briefing beginning here out of the BOK.
Yeah, so rate hold, obviously, the next move is more likely to be a hike. But Korean won doesn't really move against the rate. It's all about equity flows, and it's not too strong at the moment. So it's a dollar game for now.
There we go. And it is a weak dollar game.
Weak dollar game.
There we go. Stephen, fantastic. Stephen Ju, our Chief Asia and FX rate strategist here. Coming up, JLL, we're turning our attention specifically to Hong Kong and the property market entering this recovery, which most people expect to be on the cards this year. The benchmark index and the Hang Seng property gauge is set for a 10th straight week of gains. That's a record run. The Greater China co-CEO Alex Barnes joins us in a couple of minutes. This is the China Show.
All right, well, it was all the news yesterday. Hong Kong has taken its first steps away from austerity after public finances ended their longest stretch of deficits in 2 decades. Officials are pledging billions in tech spending and some tax relief for more than 2 million people. Other highlights include more investments for the northern metropolis, cross-border tech hub, as well as higher stamp duties for home sales, over $12.8 million US. But yes, the surprise of return to surplus was certainly something that really kind of, maybe in some ways surprised all of us too.
Yeah, and the fact that it came from such a big deficit forecast and it just managed to eke itself out just above zero and just underscores, I guess, the momentum that has largely come back in most parts of this economy. To help us summarize the vibe out of yesterday, let's bring in our China economy and government editor. Alan Wong is with us here on set to talk us through mostly positive. Is that an accurate way of describing the budget?
Yeah, that's right. And then we're seeing Hong Kong return to a budget surplus surprisingly early because of really the red-hot stock market in Hong Kong. And there were a lot more trading, and then the government collected a lot more stamp duty from those trading activities. And Paul Chan also struck a pretty confident tone, saying that that kind of trading volume is going to continue this year. So made a pretty rosy forecast for government revenue as well.
Can we talk a bit more about what some of the policies that came out? I mean, it seems like when it comes to the properties, we're seeing this optimism really kind of reinvigorating the equity market, the property market, that there seems to be some sort of recovery underway. There is this new stamp duty now on some of these luxury homes, though. Yeah. What more do we know at this point, the impact it could have?
So it's interesting that they set the increase in the stamp duty of those properties to at the 100 million Hong Kong dollars mark. So it's really luxury properties. So we're talking about lower priced homes. They're not being affected, but I think there's some property stocks that moved because of that measure. It just reflected a couple of things. One is that there aren't many more cooling measures that the Hong Kong government can remove to support the property market, and we've seen prices come back a little bit. But we're also talking about prices returning to improving from a pretty low base after 3 years of the decline. So it's a positive sign, but how positive it is, I think it's up for debate.
Okay, yeah, we'll just have to see how the policies play out, or the lack of it, which I guess somewhat underscores the lack of support that is perceived to have been needed to this market here. Alan, fantastic. Thank you so much, Alan Wong there. In fact, the market's been expecting this large recovery in the property markets. We talked about this 10 weeks of gains already on the Hang Seng property. 9 weeks already, let me caveat that. We're set for a 10th week of gains on the Hang Seng property gauge, which at 10 weeks, if this holds, and it looks like it will, let's see what happens though, would be a record weekly run going back to, I think, the mid-80s. But yes, this is we haven't ever seen a 10-week run here.
Yeah, joining us now to talk a little bit more about this is Alex Barnes, Greater China co-CEO at JLL. Great to have you on the show. I mean, tell us a bit more about this recovery, first and foremost here, and how sustainable do you think it is?
Yeah, so broadly we see the economy recovering. So we saw GDP growth 3.5% last year. That's been driven very much at the top end of the market. If you look at the residential sector, the second half of last year we started to see the market find its feet. So we saw capital values go up. We know rents are at an all-time high. And that's given us a lot of constructive evidence to support the fact that we think that mass residential, in particular, will continue to grow. This year we're forecasting growth of at least 5%. And if you look at how the government has been releasing land plots for development, you see developers are also participating in that, and they're pricing it at the higher end of market expectation, which also means developers are constructually positive about the market as well.
Can I just get your take, too, on the very, very top end of the market, right? That stamp duty that was tweaked to the upside. What kind of volumes have we seen there to merit that? And what do you think the effect is going to be? Apart from, of course, Yvonne having to put on ice that massive purchase at the peak.
Investment in my big house.
Good question. Last year, we saw the most number of transactions over the $100 million mark since 2022. And in January already, we saw 26 transactions. But it's a very small part of the market, so it makes up less than 0.5% of all transactions. So the real story here is mass residential. For that luxury segment, we do think that the market will just cool off for a few months in terms of its transaction volume. But when the market digests this change in stamp duty, it might be 4 or 5 months. We do think that will start to pick up again.
What's going to be driving that? I mean, people say there's this whole FOMO effect after how many years of correction that, mainland buyers are just lining up to come in and buy again. Is that what you're seeing?
Yeah, Hong Kong buyers are also participating as well. If you look at the first-hand sales market, so brand new product coming to market, we estimate around 50% of that is mainland Chinese buyers. And then there is a real mix of the rest of the buyers that are coming in and looking at that market. There tends to be a correlation as well between the Hang Seng performance and residential, and obviously the stock market has performed really, really well. And if that continues to perform well, that's just another tailwind for mass residential capital values in 2026.
Yeah, I think we have a chart to show us that, in fact, our producers are about to bring this up. They tend to mirror each other in terms of performance, which I guess is a perfect segue into the market's doing well. There's this massive IPO activity taking place in the city, and people talk about how that is, in fact, a pipeline for demand for office space, which has really seen a lot of new capacity come online. What's your outlook on office capacity here?
Yeah, so office, last year was the first year we've had structurally positive news in, let's say, in Central. So we had 2 of the biggest deals ever done, leasing transaction-wise, last year, all in the space of a short period of time.
Okay.
So the market has changed. Rents have started going up in Central. It'll take a while for that to move out. Yeah, so last year we saw rents structurally move up by about 5%. We're forecasting another 5% this year in Central. That is structurally a little bit more challenging as you move out from that, but the market does tend to recover in Central first, and then it starts to participate wider than that. So if you look at trophy assets in the market, some of them already have less than 1% vacancy. And we're getting back to that period where we almost had a waiting list in the past for some of these buildings for major organizations to try and get a hold onto.
We talked about all these sort of firms that are moving in, right? Whether it is Central Yards and the like. Are you seeing a lot of companies really wanting to come back to Hong Kong and really set up office here? And is it more, what's the mix that you're seeing right now? when it comes to tenants?
It's a really interesting mix. We do have some new economy groups, crypto, and we've got more mainland Chinese companies wanting to come through, whether that's through the IPO pipeline and having offices and expanding here. We're starting to see a bit more of that transactional volume. Multinationals are also expanding as well. So those two big deals that were done last year are multinational companies. We're still seeing a lot of that happening. And the one construct that is different this time around is that we're starting to see more companies who are current occupiers and tenants considering purchasing real estate. So we think in 2026 that could be a really big trend, and that would support rents coming back in more locations than just central. Because if a big organisation wants to take out a building, if that building is currently tenanted, which a lot of them are, those tenants will have to find a new home. So structurally it takes out a building with vacancy in the market, and it pushes new demand across the rest of the city. So that could be a really big change for 2026.
And what do you think is driving those big ticket items, that motivation to purchase? Is that an asset? Is that because assets have been trading on the lighter side of things, or is that just the lock-in cost?
I think it's two things. I mean, one, structurally, we look at it that this is a really strong endorsement that Hong Kong is a place that a lot of these companies want to be in.
Okay.
So they're now, and then secondly, they've now got an opportunity to potentially purchase real estate. Now, that won't play out for all of those groups that are currently looking in the market, but we've just seen Alibaba recently take on some real estate, and there are other organisations that are structurally looking to do that. And now is a time that there might be an opportunity to prize some trophy assets for long-term hold in the marketplace.
It's interesting to kind of see that there might be some bottoms that are forming in Hong Kong. Are you seeing then any of that in mainland China right now?
Yeah, so structurally, mainland China still has oversupply, and it's going to take a little bit of time for that to be sort of fully fleshed out. Where we're focused at the moment is on sort of tier one markets, and if you think about the corporate side, there's a lot more activity now in Shanghai, Shenzhen, new economy drivers, technology that are starting to slowly grow those markets. So we're quite constructive around how that might play out over the next couple of years.
Speaking of that, the intersection on that on the budget is, the Hong Kong government seems to have earmarked a significant amount of money into this broader theme of AI, right?
And aligning it with China, too.
And aligning with China,
with the five-year plan,
attracting AI into the AI firms into the city. I'm not sure if the Northern Metropolis goes into that, but yes, what are the non-central stories that we need to be talking about here?
Yeah, I think that's pretty important for the long-term future of Hong Kong to move past just being a global financial centre, but the other parts of that which are ultimately going to keep us competitive for a long period of time. So we're very supportive of technology and innovation growth in that part of the market. The other story that I think interweaves all of that as well is the talent that sits in the city and the expansion of the education sector here, which the government has been supporting for the last few years. That is a pipeline of talent to attract more of these AI and technology firms to set up in Hong Kong. We got 5 of the top 100 universities. No other city in the world can lay claim to that, and that's really valuable. That's also providing a lot of investors back into the market who are trying to cater for the accommodation sector for that. Then you've got the professors, and those are going to be setting up, incubators and new opportunities in the market. So that's a big part of the market that I think is under talked about, but is also bringing back institutional investors to try to cater for their expansion.
One part that has been still sore, I guess you could say, is the retail portion of real estate. Do you see that catching up this year too?
Consumerism has fundamentally changed globally, and that's been really hard felt in Hong Kong. So we don't structurally think that is going to change dramatically this year. We do have more activity in the market on the retail side, where there are some incoming opportunities from mainland China, from Korea F&B firms, but it's not a large scale. So we're still forecasting rents to go down 5 to 10% for street level shops.
Alex, thank you so much for taking the time to come in and do this again. Alex Barnes there, guys, co-CEO of Greater China at JLL. Right, in fact, just on the budget and the Hong Kong story, more coming through from yesterday, more details and expanded remit. Is that a good way to put it? Clara Chan will be joining us, of course. She's the CEO of HKIC at those times. Let's call it 24 hours from today. Plenty more ahead. This is Bloomberg.
All right, we're giving you now live pictures out of Seoul this morning. The Bank of Korea Governor Jong-Eun is currently speaking after, of course, its latest rate decision to keep things unchanged. He's talking a little bit more about, what happens when it comes to the tariff side of things, given, of course, the Supreme Court ruling. He says, look, it will have limited impact so far. But really, the main headline really that came through, I believe, is really they're expected to keep rates on hold at around 2.5% through most of this year, if not, all of this year, according to our Bloomberg economics. So with even hikes, according to our economists, could begin in 2027 as well.
Yeah, that the next move could be
higher,
but we'll need to wait a lot of time and some time before that actually happens. Just to also mention, and this is something interesting too, right? This intersection between this massive rally in the equity market, which comes through in the form of memory, the export side of things that, to his point, remains largely unscathed by the tariff story. So this AI frenzy that's taking place in Korea continues to give. This is Bloomberg.
$11:29 a.m. in Tokyo. Japanese markets are heading to lunch break in just a moment here. You are seeing equity markets catching a bit here this morning, but then again, you take a look at some of these Nvidia suppliers, they might be going the opposite direction here today. But it's interesting to see that we're coming off some of the initial, sort of highs that we saw with dollar yen after what we heard from Takaichi with her kind of two recommendations to the BOJ board. So that was taking more of a dovish tilt. We did see dollar yen hit 156 levels at one point here. We're coming off that just slightly here right now.
Yeah, she is turning out to be what my favorite rom-com movie. She turned out to be a dove, actually. There we go.
Is that a rom-com?
You just got that, right?
Dove?
Love, Actually.
Oh, Love Actually. Sorry, I thought you meant dove.
Yeah. Who let the doves out? Let's have a look at Asian markets right now. 0.8% to the upside. I think interesting really is, in case this actually falls through the cracks, very important story that's taking place given the Nvidia results is, it might fall through the cracks because of the Nvidia results, is separately lithium prices, lithium stocks are absolutely lit today. Zimbabwe banning concentrate export. It played out already in the U.S. It's playing out very sharply and noticeably in the Asia Pacific. Coming up very shortly, also across the big Chinese names, whether that's upstream, downstream. There we go. In fact, on the downstream side of things, it's really being felt as far as the battery makers are concerned. But yes, Tianqi Lithium, Gangfeng up about 4%.
Yeah, bringing it back to the whole AI trade, right? It's interesting. We were talking to Beth Kindig saying, despite these Nvidia earnings looking good, I think the market is still quite fatigued and we're still kind of dealing with this whole kind of AI scare trade right now. Is AI actually your friend or actually a foe? And it's interesting, one tiny firm like Centrini Research can trigger such a meltdown as we saw, right? Because, you're getting a lot of backlash on of course, that report that we did speak to, of course, the co-author Alap Shah yesterday about, the White House saying it's science fiction. You have, Morgan Stanley saying it's actually mean there's more opportunities for stock pickers out there as well. But let's play a little clip about what he said on the China show yesterday.
The market right now is trying to digest this idea that AI has gotten a lot more powerful in the last 6 months, and it's going to start changing. It's not just going to accrue to the benefit of every corporation and every foundation lab and every semiconductor company, but instead it's starting to disperse and figure out, hey, who are the winners going to be and who are the losers going to be.
Yeah, and it raises the question, right? We don't know what to think about AI anymore. What is the narrative? It used to be about, all this investment, is it really going to be fruitful? Are we going to get that ROI? And now it's like, oh gosh.
If we get the ROI, everyone else is in trouble.
And then everyone else is going to, go bankrupt or whatnot. So it's so extreme, all these scenarios. But certainly, there's a lot of questions on what this means because there's still that disparity that you're seeing here in Asia, right? When you continue to see U.S. and Wall Street scared over the sort of how fast AI is growing. In fact, I had a friend that messaged me after that interview and said, look, it almost kind of feels like the start of COVID once again, that there's a start of something that is going to change massively to a point that it's almost structural. And she asked if, the sentiment is the same in this part of the world. And I couldn't quite say to that degree right now.
Yeah, like there's something big that's happening. You
know what's happening.
You feel it's in the air, but you can't quite understand what.
Trini says 2 years from now, which is not too far away.
No, not at all. No. Not at all. But I think the point also, just to counterbalance that point, right? Beth Kindig, and I think most of the pushback that's come in the last 24 hours on the back of the research is the people seem to underestimate the positives that AI will bring. So while it could create unemployment, it creates cost savings. It creates
entrepreneurship.
And entrepreneurship because it creates new avenues for people to put stuff up, right? But anyway, just to underscore, it's a hot debate, and it's probably somewhere in between the reality, of course. Now, speaking of how can we forget memory, right? Korean stocks have been among the best performers this year. In fact, we're almost at March, and this market has closed lower, get this, only 6 times so far in 2026. Why am I talking about the Kospi Index when this is really 2 companies, SK Hynix and Samsung Electronics? Meanwhile, U.S. tech firms have lagged amid fears of the impact of AI.
Yeah, Julie Ren has a writing about this in her latest column, right? And she says this divergence shows it's time to rethink some long-held investing myths. She's here to tell us a bit more. So you talked about these sort of paradigms that need to be rewritten. First of all, you're talking about book value is now worth something. What do you mean by that?
So in the past, U.S. was undisputed world's favorite stock market, right? Because it's asset-light, it has tons of software and the data services companies. And people loved it because these software companies, they have a lot of recurring revenue. So I can kind of project 2 years down the road what kind of earnings growth I can expect to see. And because of that kind of earnings visibility, they get higher valuation. And on the other side of the scale, we have Asian industrial companies like Samsung, Hynix, or some names in Japan and China. The problem with them is that the industrial companies are seen to be very cyclical, to follow the global macroeconomic business cycles, and therefore they have no earnings visibility. And therefore, even though these companies have a lot of factories and the know-how, they have very low valuation. This whole AI scare trade is turning that whole narrative around. What we are starting to realize that the software companies' recurring revenue may not be recurring at all. They can be easily disrupted. And on the other hand, we have heard about the memory chips super cycle, right? Samsung and Hynix, they have their supplies completely booked by the end of 2027. It could even go into 2028. So the narrative now is that instead of being cyclical, they are in a super cycle. So what you see is that, like Asian markets are doing so well, especially in North Asia.
That's interesting because if you think about it, it's fully booked until next year. That's as good as recurring revenue as you can get.
Right.
What about the second myth?
The second myth is that countries with low birth rates are just not that great. The idea was that, okay, we know Korea, Japan, and China, women are not having children, right? And the idea was that, okay, because of the labor shortage, it's going to cap the GDP growth. And also, older people don't spend as much as younger people. So it's going to cap everything, like consumer spending, everything, right? But you can also turn that narrative around and say that, okay, because of the labor shortage, all these North Asian countries, they're going to adopt to robotics and AI a lot more, right? And we're seeing that robotics adoption in South Korea and China and Japan are ahead of the US. And going forward, instead of talking about SaaS, software as a service like Workday or IBM, we're going to talk about RaaS, robot as a service. So basically, everyone will have a robotic household housekeepers, right? And the North Asia is just more suited for robotics.
So, do you think what we're seeing the market reaction? Do you think sometimes it's quite exaggerated? Some are calling this Citrini research just pure fiction. Do you think that there is some value, or at least just warranted, that what we saw in the last couple of weeks when it comes to this scare trade?
I totally think so. I think the AI rally is still continuing as we see in South Korea and Japan, and to some extent in China. But the kind of AI companies that are going to benefit are going to be different. We are going to look at the upstream of the supply chain because you're already seeing the earnings. Yeah. Whereas going downstream, all the LLMs, we don't know when they're going to make money at all.
Julie, thank you so much. You can check out Julie's piece, of course, out of Bloomberg Opinion. Our columnist there, the AI scare trade shatters 2 investing myths. It's on the Bloomberg terminal. It's also available on Bloomberg.com. Okay, let's take you straight back to this ongoing Bank of Korea press briefing, which has, in fact, turned out to be quite market moving when you look at the bond futures are coming up on your screens to the upside. So yields are pushing down as the government, well, as the governor himself has commented quite directly on the spread between the government bonds and the policy rate right now. He is phrasing it as excessive, and that's really leading to the snapping back of the yield curve or the pricing up on bond futures, as you can see on your screen.
Yeah, and really talking about the dot plot as well. And really no board member sees a need to raise the rates in the next 3 months or so, but they do. The dot plot shows concerns about the currency, about oil prices, for example, as opposed to growth worries, is what they're saying here right now. And the output gap's still negative this year, but it might be a smaller sort of a gap, according to the governor. So, yeah, some pretty interesting sort of lines there. They're still seeing that output gap could be turning positive in the second half of next year. All right, we'll leave that there. We'll bring you a little bit more once we do see some lines coming through from BOK. Another AI news this morning as well. Alibaba stepping up its push into AI-powered software coding by offering low-cost access to several of its top models. Users can access these products for just over $1 for the first month. Alibaba's cloud unit says it has begun selling tools built on the group's own open source model Qwen 3.5. It's also using platforms from startups including Zhipu, Moonshot AI, and Minimax. Reuters is reporting that DeepSeek's latest AI model was trained on Nvidia's Blackwell AI chip. Now, it quotes U.S. officials saying that DeepSeek removed technical indicators that might reveal its use of American AI chips. The Chinese embassy in Washington told Reuters that Beijing opposes drawing ideological lines, the expansive use of export controls, and politicizing economic trade and technological issues. Investment firm General Atlantic is reportedly selling a stake in China's ByteDance that values the parent company of TikTok at $550 billion. Now, according to Reuters, the sale process was started in recent weeks with the aim of finalizing it next month. The reported deal highlights sustained investor interest in the company.
Right, coming up here on the China Show, the drug-making unit, South Korean conglomerate Lotte is, the conglomerate that is here, seeking to take advantage of what it expects will be a global supply chain shift away from China. We hear exclusively from the CEO of Lotte Biologics coming through next. Right, the pharma arm of Korean conglomerate Lotte is betting on growth from a substantial shift in the global order here in terms of capacity or pharma production away from mainland China. The CEO, James Park, told us exclusively that acquiring a facility in New York has positioned the company as an alternative for pharma firms looking to de-risk their supply chains. We have more from our co-anchor, Sherry An.
I'm here in Jamsil Central Seoul, home to Lotte Group's flagship assets. Its hotel, amusement park, shopping mall, cinema, they're all mainstay businesses for one of Korea's oldest and largest conglomerates. The group is now carrying out a major overhaul, betting on growth drivers and shedding underperforming assets. Lotte's chemical and retail businesses have been pressured by the global petrochemical downturn and sluggish domestic demand. Lotte Chemical posted another year in the red in 2025 with a $1.7 billion net loss. The conglomerate is now offloading non-core and overseas assets to shore up its balance sheet and pivot to growth. At its core, Lotte Biologics, with the group betting on its contract development and manufacturing business as a key future engine.
We're focusing on the CDMO because we have expertise in execution, and we have a history of a chemical division as well as customer focused as well in hotel and retail business that we're well known for the last 50 years. So again, we could combine those technical and science with the customer focused, and CDMO is the right area, and then the bio industry is also growing as well. So we feel it's the right area for focus for Lotte Group.
But because of that, there are so many other players as well, including domestically Samsung Biologics, Celltrion, and of course globally as well, as a new entrant. And you're very young, only what, 4 years?
Yes.
4 years, 2022 you launched.
Yes.
How do you compete?
That's a good question. We are late boomer, but I think one of the things that we could differentiate is we do have a, BMS legacy facility that we purchased 3 years ago in Syracuse, New York, who has a rich history and heritage of a biological product manufacturing. So that's the differentiating factor. And then again, we cross-train from Syracuse as well as the Songdo facility that's coming online. So there's a tremendous opportunity for us to work together in cross-training and get ready for production in Songdo facility later on in 2027.
Are there any benefits to the supply chain realignment for Lotte Biologics, especially if you consider the likes of the new Biosecure Act that may hinder some of those Chinese competitors from the U.S. market?
Absolutely. We have seen a little bit of surge in terms of our candidate pool who may have used Chinese-based CDMO wanting to come to U.S. for U.S. manufacturing, mainly for clinical study in the U.S. It'll be easier from the registration perspective to have a clinical supplies manufactured in the U.S. for U.S. patients. So from that perspective, we're getting some traction. And also for the European pharmaceutical companies, again, because of this pressure, they want to have opportunity to manufacture in the U.S. as well for the U.S. patients. So definitely we're getting some positive attractions for our Syracuse site.
When you look at the customer demographics and across regions, are U.S. clients the most important at this point? Is that the most active part?
I think so. I mean, again, generally speaking, U.S. is the biggest market. So there's a lot of big pharma companies there. But certainly there is also, strong presence of Korean pharmaceutical companies as well.
Could eventually China market also be available?
I think so, but because of the current environment, I think that will be a little bit more challenging. But we're not going to ignore it because I think China has those areas where biosimilar development they're very quick on. So depending on availability in China CDMO versus what we could deliver from the Asia market as well as the rest of the world.
Fridays. And that was the Lotte Biologics CEO, James Park, speaking exclusively to Sherry in Seoul. In some other corporate news this morning, UBS strategists say the private credit sector could see default rates surge as high as 15%, which is 2 percentage points more than the firm's forecast less than a month ago. And they expect the worst-case scenario for defaults to happen if AI triggers an aggressive disruption among corporate borrowers. Warnings about private credit have been building in recent days, stirring comparisons to the 2008 financial crisis. Salesforce fell in extended trade after the company gave a lukewarm outlook for growth. It sees revenue hitting around $46 billion in the new fiscal year, which was in line with analyst estimates, but still failed to impress investors. The forecast is fueling Wall Street's worries that software giants will lose out to new competitors in the age of AI. Qantas has posted record first-half profit as it accelerates a major fleet overhaul. The airline is replacing aging domestic jets with new Airbus aircraft, helping drive net earnings up more than 5% to just over $1 billion. Qantas has taken delivery of about 40 new planes so far, with the upgrades boosting Jetstar's profit as well. The CEO, Vanessa Hudson, says travel demand remains strong.
Yeah, in fact, we're going to head straight to the corner office cockpits with the CEO of the airline joining us at those times on your screen. So stay tuned for that as Vanessa Hudson joins Inside with Hazlina Amin in just over 30 minutes from now.
All right, we're still tracking, of course, what happened during the Lunar New Year holiday here. And, we start to see more of this data come through here and really that record number of domestic trips and tourism spending.
Yeah.
But it still seems like the sell side is not too convinced. They're saying, maybe they're still a bit disappointed here. And the numbers really do mask the underlying weakness that we're seeing in household consumption. Let's bring in Min Lo. She's been tracking all things here on just a snapshot of what we've been seeing across some of the indicators so far.
Yeah, I think the numbers are really very rosy if you look at the headline numbers when it comes to tourism spending, for example, over 800 billion yuan. It's a double-digit increase, about 18% higher on year. That's the tourism spending. And then if you look at the number of trips made, cross-regional passenger trips was up about 8% on year. Cross-border trips, the overseas trips, that's up about 10% on year. But then you got to think about how this year's Lunar New Year holiday is also the longest on record. There are 9 days instead of 8 days last year. Some years it's just 7 days. So Evercore calculated, if you break it down into spending per trip or implicit spending per trip, they said it's still below the record high that we got last year. So spending per trip is still stagnant. And another data point to look at is the box office numbers. That is extremely weak, the weakest since 2019. And this is often seen as a bellwether for consumption, although it could sometimes also be distorted depending on whether there are blockbuster movies, good content in the cinema. So here you can see on this chart, it is the weakest since COVID-19 broke out in China. So overall, the numbers is looking a little bit mixed and perhaps also reinforcing those calls for more stimulus from the government.
All right, Min, thank you. Tracking all those things for us, box office, railway trips, and the like here. So, yeah, maybe not as rosy as the headline numbers suggest, but certainly that's one thing to watch very closely. In some of the world news this morning, U.S. Trade Representative Jameson Greer says President Trump will sign a directive raising his global tariff rate to 15% where appropriate. He describes the move as a way to maintain continuity with countries that already have trade agreements. The U.S. administration plans a 150-day window for additional trade investigations that could result in more permanent and targeted tariffs.
So our goal with all of this is to have continuity. So we want to have the 10%, and we're looking about how to implement the 15% that the president indicated, because we want to have continuity. We want the countries, we want the companies, we want people to understand that what we were doing before, we're going to reconstruct with alternative tools, because we want to keep going, maintain the policy. We'll just have a change in the legal implementing authorities.
Cuba says a speedboat it fired at near its coast was carrying armed Cuban exiles intent on entering the country to fight against the government. The Interior Ministry in Havana says 4 people on the boat were killed as Cuban security forces returned fire when the Florida-tagged boat shot at a border patrol. Now, a Cuban commander was wounded along with 6 people on the speedboat. The incident may escalate an already tense standoff between the nations.
I'm not even going to speculate as to what it could have been. It's a wide range of things. But suffice it to say, it is highly unusual to see shootouts in open sea like that. It's not something that happens every day. It's something, frankly, that hasn't happened with Cuba in a very long time. But we're going to find out. We're not going to base our conclusions on what they've told us.
Right. You're looking at some share prices of a lot of banks across the region. As you can see, most of these are in Singapore. There's a story out right now. You can check that out for our Bloomberg clients. Should be out on the terminal, should be out as well on the website. That some of Asia's biggest banks are lining up bids for HSBC's assets in Indonesia. You can look at the story there for more details on that. HSBC, of course, reporting earnings yesterday. Still up on your screens, 1.7% here in Hong Kong. Chip stocks coming up in focus too, given the Nvidia earnings, which actually were very good, apart from the fact that the markets did not see them as very good. Samsung is up 4.6%, and a lot of the supply chain, mostly still a Korea story. It's not playing out as far as you can see, Japan is concerned there, of course. Ibiden is listed in Japan, its biggest supplier that's in Japan. It's also not playing out to the extent you're seeing in Taiwan as well. All right, before we wrap up the show, MCI Hong Kong outperforming still. Shanghai comp down a little bit, still near 10-year highs and that. And yeah, that's it from us here on The China Show. We will see you all tomorrow.